I don't want to be one of those YouTubers that says crash is coming and we are going to get the biggest one of all times. But where the world economy stands today, you wonder if there is any truth to it. I mean, with the amount of money we have printed, with the support we gave folks during pandemic, where the inflation is today and the challenges we are facing with supply chain, you have to think like that. So before I go deeper into the video, I just want to make one thing very clear. I still think that companies that have real profits and make product or services that the world needs will do fine. Yes, they will see pain, no doubt, but if you trust your DD and have a strong conviction, then you know that these companies will survive. I mean, they all did in all the previous crashes. Yes, they were beaten down, but nobody went to zero or the market did not go to zero. So I think if you are a long-term investor who holds shares, I'm not talking about options, I'm talking about stocks and shares. And if you hold companies with real earnings and real profits, then we all should be able to make it fine during the storm that I see in the horizon. So let's talk about the storm. So when the market is green and when stocks like AMC or Bed Bath & Beyond are making new highs recently, I mean, not all-time highs, but new highs, it's hard to fathom the fact that just 2 weeks ago or 3 weeks ago, market sentiment was totally different. I mean, Tesla was flirting with 700s, and I read some comments which said that Tesla is going to 500 or lower, and now Tesla is sitting close to 1100. So what changed in the last few weeks? It was the market sentiment and investor sentiment. Supply chain didn't get better. Inflation didn't get better. Russia-Ukraine situation is still the same. Yes, there are talks, but nobody knows what's going on. We felt, as investors, more comfortable to come back and start buying or nibbling again. Very small buying. There is still not big institution buying going on. So let me share a chart with you and let's see where we are headed in the next few months. Okay, so this is a chart on your screen. And this chart will tell us or give us the data that we need to know now for the next 3, 6, and 12 months. So there is a weird shift that is happening right now. The market regime model, this is called market regime model, and this is a study that was conducted by Bloomberg, which is a fancy name for clusters of persistent market conditions, has moved into its red zone. That means the stocks will go through a rough patch, but on the other hand, the economic regime model suggests that macroeconomic backdrop is still very strong. Now, this is a rare combination of the red market regime, but strong economic model. And this is part because how strong the labor market is. And that's why some folks are saying we are never entering a recession because labor market is too strong. And there is so much spending money folks have on fun stuff, for now at least. But this particular model is suggesting that we are entering on extended period of pain. We are talking about 6 to 12 months of pain in the equities market. Take a look at this image. So if you see the red, that's basically the rough patch that they are talking about. And you can see that we were in this patch in the 2020 crash all the way to 2023, where we were constantly struggling, trying to get up. But the market, this is S&P by the way, so let me just actually share this. So red regime is basically a cluster of the market indicators associated with poor forward returns, yellow regime associated with moderate forward returns, green associated with accelerated forward returns, and then white is S&P 500. So when we entered the red regime, basically in 2099 towards the end, then we saw the S&P went up. We were in the red regime, but still S&P traded higher, but then it started to come down and we actually crossed all the way to 1997 level. Then the same thing happened in 08 when the 08 crash happened. At that time, we straight came down to, I would say, 97 level, as you can see over here. Then in 2016, when we had that, S&P was struggling, it struggled, and then it came down, and we basically started to go up where we entered the red regime. Now, if you pay attention to 2020, right here, we had that when we had that COVID crash right as soon as we entered, and the market from all-time high went down really low to the 2018, 2019 level. And then after that, we saw this spike, which was unheard of and unseen of in the market. This is the rally that everybody talks about and will talk about in the history. So now we are entering this brief red period right here when the S&P made all-time high over here, and then after that it started to struggle because of all the issues that surfaced. So the next image that I'm going to show you will show the average return while we were in all these regimes right here. So average in red regime, when we were in red regime, the average was in negative. In the 3-month period, in the 6-month period, and in the 12-month period, we were in the red right here. In the average, which is basically the yellow regime right over here, when we entered the yellow regime period, We actually made gains in the 3 months period. We made about 2.5 to 3% gain. In the 6 months period, we made about 5% gain. And in the 12-month period, we made about 10% gain in S&P 500. When we entered the green phase, which we entered a couple of times, as we can see, the average return in the 3 month is about, I would say, 4%. The 6 months was about 12.5%. And then the 12-month return was over 15%. This was very, very bullish that it happened. And we saw this happen right here just last year in 2020 period after we came out of that COVID fears. So as you can see, these three regimes suggest that we are right now entering a red regime right here, which is going to be an extended pain for the equities market. But why is this happening? When folks have money saved up, why are they not buying the stocks? Well, the reason is simple, and I personally went through this. So until December, January of, I would say, last year, I'm talking about 2021 December, anytime I get some saved up money, I always looked at how I can invest this money back in the market. I would not make any purchases that can wait. Here's a small example. The computer that I edit my videos right on my right screen, it is from 2012. It's older than both my kids, and it sometimes struggles and hangs, and I was dead against buying a new computer because I felt if I put that money in the stock market, I will get better return than the 10 extra minutes I spend on editing. But guess what? Not anymore. Because the way market is doing, I felt that a new computer will serve me better than buying a stock in the short term. Now, this is a very small scale thinking, but this just shows my investor sentiment is right now. Folks are fearful, or I would say fearful of putting any new money in the market. We all know this is a good time to buy. We know that markets will eventually come out of this, but still we are trying to time the market, which we never should because no one can. So I always say this, that I'm timing my entry. That means if a stock goes down in the short term, I'm not going to regret my decision because I'm buying it for the long term. And that is why I am still not making any purchases. I have some money saved up. I have told you guys in my previous videos that I have money, some money on the sideline, and I will be buying Tesla, Google, Amazon. I really want to buy these stocks, but I'm not making any purchases right now because I want to see how Russia-Ukraine situation unfolds in the coming days, how inflation unfolds in the coming months. And I might be late, I might not time the perfect bottom, but it's okay because I'm buying it for 2028, 2029, 2030 time frame. And if I buy these purchases today, I'll be fine. Now, can I buy them today at Tesla 1000? Yeah, of course I can do it. But the reason why I'm not doing it, because again, my goal is not to sell in next 1 year, 2 year, or 3 year for that matter. But the reason why I'm not buying it, because I feel I'm going to get few extra shares if I buy it when there is a down day or a downturn in the market. I can't speak for everyone, but would love to know your thoughts. Have you changed the way you spend your money in the market in the last few months? Because that's a very important market sentiment, and your comments will tell us how we are going in the market or how we are thinking about the market. So let me know. And while we are on the comment topic, take advantage of free NEO stock promotion from Moomoo when you open an account and deposit $100. You will get guaranteed free NEO stock and also 4 free stocks. I think free sounds better and better every day, and the NEO promotion is ending today, which is March 31st. So coming back to the market signal, there is another thing to note here, that this weakness is not just among the market, but some stocks are actually trading at a much discounted level. Take a look over here. Right here, I'm gonna read this particular paragraph to you, okay? So this is a research from February 28th, and this was the research that was done before Amazon announced their stock split and how the investors are feeling right now. Okay, so take a look over here. So I'm not gonna read the whole thing because this actually is a topic for another video. This is a very good statement that they made over here, but I'm gonna highlight just 2 things over here. Okay, so it says, over here, among the Fab 5, Amazon, actually, I'm going to use this right here. There you go. Okay, so among the Fab 5, Amazon trade at the most discounted premium to its own average as ranked by forward price to earnings, while Apple is the most expensive relative to its 5-year mean. So I have mentioned in my previous videos before that Amazon is an amazing buy where it's sitting right now. Amazon is one of those stocks that has not gone anywhere in all this bull run that we have seen. I mean, Amazon has been at that level for a very long time. 27, 2800, 3000, it's been flirting at that range for a very long time. Now we see Amazon touching 3200, 3300, and this was released on February 28, 2022, when Amazon did not announce the stock split. They announced the stock split after a few days. So I feel Amazon, of all the companies, has one of the best discount right now. So if you look at their price to earnings, if you look at the revenue that they're generating, if you look at how the market is taking Amazon, I feel Amazon is one of the best companies right now to get in at these levels. Still, I'm saying still, I'm not buying right now because I feel that in the next few weeks, we will see the real face of the market. I could be completely wrong. I could completely miss the boat on that. And that is okay because I feel the research I'm doing, the things that I'm looking at, I feel that I need to wait a few more months, or I would say a few more weeks before we enter the market. So again, I don't want to create FUD or fear, but looking at the data, I asked this question to myself. Will I be more comfortable buying Tesla versus NIO? Will I be more comfortable buying MasterCard versus SoFi? See, I like NIO. I just did a video yesterday and I think it's a great long-term hold. And I really like SoFi with what the management is doing and with what the company is doing. But the recent market conditions is not making me put any of my new money into these companies because I feel that new money that I'm making and the way the market is looking or the forward looking for the next 6 to 12 months, I'll be better served putting my money into the companies that are profitable right now and have being adopted by many millions, which is of course like Amazon, Google, and Tesla. So if you like today's video, then consider giving it a like and comment below to let me know your thoughts on the market condition. Where do you see the stock market go from here? And also take advantage of Moomoo and free NIO stock, as you cannot go wrong with free when you sign up and deposit $100 in your account. You will also get 4 free stocks, so definitely take advantage of that. The promotion expires today actually. Consider joining our Patreon and Discord if you like to speak with a like-minded individual. Links are in the description below. Thank you for joining me. Pleasure to share this. Until next time, you all have a sparkling day.